Prasun Gajri, CIO, HDFC Life Insurance Company now joins us. Hi Prasun, thanks for joining us. We are seeing, this correction which everybody was calling
Hi.
off. Someone was talking about 5% correction. Some people were talking about 10%. We are almost there, 10% correction. Theoretically, even a 15-20% correction in a bull market can be called as bull market correction. But that's when we talk. But people who are invested in this market, 10% correction in headline index means sometimes 20-25% of correction in portfolio if it is more of mid-cap oriented. How should one approach this market? It is easier to say that this market is giving you a good opportunity of buying on dips, but which pockets, where exactly one should invest in? How should people who are already fully invested in equity and are now seeing their portfolios down by 10 to 15%?
Well, that's fair. Portfolios have indeed fallen. Mid caps have taken a larger beating compared to large caps, and that was more or less anticipated given the way the mid caps had run up in the last couple of years. Let's get things in perspective. On a financial year basis, most people are still in the money. So it's not something which a very large correction has happened that there is any need to panic. There is definitely a little bit of uncertainty in the market at this point of time, and that is leading to this kind of a correction. But I don't think there is any worsening in the fundamentals per se. If you look at it, our sense is that the overall economic indicators, most of the high frequency data which you get is in fact showing a cyclical upswing. The economy, the growth is indeed starting to improve. The inflation numbers have come lower than anticipation. So clearly this augurs well for earnings, and even the December quarter earnings were not bad. So we anticipate that when the March quarter numbers come through, the earnings will pretty much meet the expectations, and in certain sectors will start beating the expectations as well. So overall, I don't think fundamentally things have changed that dramatically to warrant such pessimism. Yes, there is a challenge a little bit on the current account deficit, on the fiscal account deficit, but the fact of the matter remains that this is pretty much at the margin. There is absolutely no reason to worry on these parameters as yet. And as long as economic growth is improving and earnings have started to improve, I think that augurs well for the market. So in our view, very clearly, any knee-jerk reaction is not warranted. We are seeing uncertainty on various parameters. Obviously, there is a little bit of political uncertainty which has crept through the market. You have seen the issues related to the banking sector which have come through. There could be some profit booking because LTCG comes into force beginning April. So all those factors could be an issue which could be impacting the market. So one should be patient, wait and watch, and then take a call. So our view is that this is offering a good entry point in case someone is not invested, and in case someone is invested, one has to be patient. Money has been made over the last 2 to 3 years, in fact longer, and any such correction is a part and parcel of the equity market. So nothing to be really alarmed about at this point of time.
Well, Prasun, in fact, you did touch upon, the question which I was going to ask you next, which was political risk, and you did touch upon them, and that's a soothing, voice and recommendation from Prasun that this is just a noise at this point of time, and one should hold on to their horses, and it's not a very big panic kind of situation. It's just 9 to 10% correction which generally happens in a bull market. So let's get into some sectoral discussion at this point of time, Prasun. And one sector which has outperformed, many participants have missed out on taking exposure at much lower level, was IT. And we are seeing IT space outperforming, not in today's trading session, but overall it has been doing well. Some people are calling it just a bounce and it may not sustain because earning visibility is not there. But when we talk to big companies management, they seem to be more optimistic than fund managers on the street. How are you approaching IT space from investment perspective?
Well, we also have been underweight on the sector. I guess we are pretty much waiting for some earning traction, some visibility on growth to come back to the sector before taking the next call on the sector. We have seen this kind of optimism emerge last year as well, but it did not really come through as we saw the numbers across the year. So in our view, one has to still wait and watch and see how the earnings traction come through. I don't think March quarter is going to show any significant visibility on any growth in the sector. one will carefully look at the commentary by various players, but the problem is that different players are giving different commentaries on various sectors in the IT, within the IT space. So somebody is bullish on financial, somebody is more bullish on retail, somebody is bearish on financial. So it's a mixed bag out there. So I think one has to wait and watch. This is a big transition happening in the IT space given the way the business is conducted. So at least as of now, I am not extremely positive. IT does tend to outperform in a market which is correcting, and that has happened this time as well. But I am not really sure that in case the markets start to recover and do well, if IT will follow suit and still outperform the market. I would wait for some earning signals, some sort of a growth sign to emerge from the sector before I make the next move to go overweight on the sector.
Hi Prasun, this is Nayantara joining in from the New Delhi studio. You know, like now people who are invested in the stock markets, they're perhaps fearing that what next, you know, have we bottomed out? Is there more pain that is left? And in light of the recovery that you're seeing in the economy in the US, in the developed world, interest rates all set to rise over there, you know, are there bad times to come for the Indian equity markets? Is this the same way the asset class should be viewed as we were maybe, let's say, a few months ago?
Well, it's very difficult to say whether the market has bottomed out in the short run or not. I don't think I'm trying to make that call. All I'm trying to say is that at least the basic fundamentals of the markets are not deteriorating. We are clearly sensing a cyclical bounce in the economic growth. The earning growth has also started to look better. The global growth is doing well. While yes, the yields will rise across the world, but as long as the growth is emerging and growth is happening in a synchronized fashion, any rise in yields is pretty much fine unless it's a very significant rise in a short period of time, and I don't see any sign of that happening as yet. So overall, I think the macro environment is fairly conducive as far as equity markets are concerned. And if the correction happens, that is also ensuring that we don't start this up move in the economic growth across the world at very high valuations. So overall, I would not want to panic at all given the situation at this point of time. Yes, 2018 could be a volatile year as far as the Indian markets are concerned. Clearly, we have upcoming elections in key states, and then the Lok Sabha elections will follow that. Whether they happen early or late, I have no clue, but the fact is we'll have crucial elections, and in every elections, market will try and read the tea leaves and figure out how we are really going to fare in the Lok Sabha elections, and that will cause its own set of volatility on either side. I mean, it could lead to rise in markets, it could lead to fall in markets. So I really don't know. But as long as the earnings are there and the economic growth has started to improve, as an investor, I take heart from that. That clearly tells me that things are on the right track. We are emerging from the slowdown caused by earlier by demonetization, then by GST, and that is always good news for the market. So we are in for a period where the the earnings will start to continue to improve, and that as long as that happens, I don't see there's any reason to worry for a medium to long term investor. Short term volatility, my sense is here to stay. This month is a good example. We have seen days where the markets have rallied significantly. We have seen sharp falls in the market. I think that is a part and parcel of the market. One has to live with that. But overall, I remain positive.
Absolutely. In fact, we're all waiting for the time when